This is intraday trading special. Usually when I see something that's of very interest, I want to present to everyone usually I do end of day, but there are times that there are these really great intraday trades. And I want to set this example. It was Tesla. Tesla yesterday was upgraded by Morgan Stanley and from a hold to a buy, and it was a moonshot, they call it. Basically is that instead of a $250 target, Morgan Stanley raised the target to $400. Right, on back of whatever reason, it's AI play, whatever. The important part is the stock gapped up on yesterday. Yesterday was September 11, happened to be September 11, but 2023, and it was upgraded by Morgan Stanley from a hold to buy and raised the price target of the stock to $400 instead of $250. Stock gaps up yesterday, opened right here, and it continued, and this is a 5-minute bars right now. So it gaps up, gap right through. So this resistance becomes support in gap. With a news like these, you can see momentum play. You can see a very good trend pullback and then continuation of the trend. So we're going to go through this as 5-minute bars. As you see, sellers comes in the low, push it down, and then start going up. Right. So it established the high of the day right here. That's high of the day on the open right there. Right. And then in 20 minutes or so, this 5-minute bar, right, it breaks up. It breaks up basically. So 1, 2, 3, 4, 5, 6, 7. On the 7 bar, then by then market's open at 9:30. By then it's 10 o'clock, which is good. Usually I don't trade the first. They say some people don't trade the first 10 minutes, don't trade the first 20 minutes. Right, by 10 o'clock, all the orders, pre-market orders have been worked out, and they try to make a breakout. The rule is that you can do a breakout play if it breaks up and then the next bar make new high. So it didn't. It actually did a pullback. It broke the high of the day at open, and then it pulled back. So that become the new high of the day. As it progress, it start making new high again. It start pulling up, and then it just went. It just went. Well, this is a pullback, and it went. So in this situation, it's a pullback, and then it go on that. So what you need to do is you take a pure breakout play. It break through the high of the day, next bar, when it go high, this is where your entry should be. This is the entry. So 267, when it broke above that, entered the play, and it just went. It's not going. It's not going on the 5-minute bar, and it's not going. So when do you actually get off this trade, and when it's up stop loss? The stop loss is here. You put stop loss here. You can put it on this last low, or you can put it for the low of the day. These are 2 stop loss points that you can do. I would have done. Right. These will be your stop loss. This is your final stop loss. Below that, you want to put a little bit, and this is your primary stop loss. You have entered the trade right here. And on this bar, when you make new high, and you let it go. You can use the MACD moving average for your exit, or it never calls back down until way later, which is over here. So you can ride all the way to here in actuality. Use the MACD when the fast line, the orange line, cross down over the blue line, the slow line, that will be your exit. So you would have hold this trade all the way through to say here, around here, and that's where you're gonna exit. And this is so these are fast moving situations. Is that you're gonna look for pullback. You can bought here, or you can look for breakout. There's two ways to play it. You can play pure breakout and then wait for pullback. You want to play both. You want to play a pullback Right, but this is not enough pullback. This is not and then it make new break, and this is a breakout. This is the play of Tesla yesterday, of the intraday. Right. And you'll enter on this bar 267 or around there, and you're gonna make however you could, and your stop loss is here or here. Right. You will scale out, get some out here, and then final loss, final out is here. And you're gonna let these momentum run. And you can see actually the MACD momentum starts slowing down, but until it actually really, it never actually really crossed until here in actuality, right? Towards the end of the day, over here. You can put a trailing stop loss. There's many ways to do it. You can actually even do a hanky. Let me get this out. So I also use Heikin Ashi. Do a Heikin Hashi. Can do that. I can do a Heikin Hashi. But the 5 minute, you're supposed to do it on a change, but you want to move out to a further one, not on the 5 minute using that. So let me take this one now. It's the smooth 10 bars. So smooth Heikin Asher smooth Heikin Asher. Oh no, not this one. Asher candles. This is a strategy. I actually just won the indicator, so bear with me. So trend indicator, super trend. One of these would do, I guess. Let's try this one. See what this one will look like. There we go. Yeah. See, it's green until somewhere here. Yeah. So you get out here, or use a MACD. You can use different indicator to get out. The whole point is your entry signal. The entry signal is either a pullback. This is not a clean pullback. We pull back this way, so you wait for the next one to wait all the breakout. The whole point is if you have people talking up, your fundamental talking up, and a gap, and then you see buyers comes in, and then sellers come and push it down. Never even push it down below the low of the day. When it break a new high of the day, you want to get in. If you get in here, that's fine too. Then you will set your stop loss here if you got in here. The thing is, I wouldn't have gotten here because this bar didn't make new high yet. I need a penetration, and then the next bar make high, then the breakout bar. That's my entry signal. That prevent a lot of false breakout for that. I want to honestly buy, continue to push it. So right here, it break the high of the day, and then it make new high on this bar. This is where around here is where the trade will have triggered. Yeah, or even the high of the day. That's 267, 268. And your first stop loss here, second stop loss is there. All right, so that is the entry. So you ride with the momentum on this trade, and this is a very effective intraday or day trading strategy that's fundamental behind it. And then the technicals lines up, and you're looking for pullback of a continuation of that or breakout, or just do both. Pull back and then also do the breakout. But this one didn't give me the signal. This one right here gave me the signal. And then that was the trade. So Morgan Stanley upgrade, well, they call it moonshot. Instead of 250 or $400 target, but you have technical confirmation. It did this. It gaps up tremendously. And then they try to push it back down, but at some point, buy just comes in, and then the real trend established. Right. So this was the trade yesterday. But it's a quick intraday. Yeah. I wasn't watching closely, so I didn't take the trade. But then I came back after I realized, oh wow, I need to talk about this trade. I need to introduce this. Can work across different time frame, but for short-term intraday trade, this is the trade. This is the type of trade you want to look for. And had looked for, and I play these back in my days. When I see this intraday, just try to ride the trend. These are great. And you find another indicator, use it for your exit signal. Now MACD, and King, and high key. How I would say, I forgot how to say it, but you use these, some of these, whatever you want to use. You want to use oscillator, parabolic, whatever. Find something that tell you the momentum is dying or that, or you just use the candlestick. Right? Use whatever indicator as exit signal, but you want a clean entry signal. Is that it break new high of the day, and then when it make another new high, that's the entry signal on the breakout play. Of course, these type of trade breakout play is more of a 60-40, even with momentum and fundamentals behind, I would say. In this case, it worked out well. Some of them will do this and then it will collapse back, and it could happen too. Yeah. So at least you want to seek a 1-to-1 ratio risk reward on this trade, and because intraday is much efficient to actually get the stock, and then you think about using the option as instrument. Instrument won't move as much in actuality, but it will adjust as accordingly. The mathematical model of options really is not linear. That's why you have other consideration is more luck multiplied behind it. So as it spikes up further, the probability of this reverting to the mean on the option model is much higher. So you don't get that linear relationship instead. So in a breakout situation, especially a short term, I just outright put the stock and then think about the option later. Sometimes I would do both. The option will pick up a little bit more, but it's the actual stock that will make a lot of money. Yeah. Or you just buy at a money option. You can do that also. But selling options, which is my typical trade, my champion trades, does not apply to intraday situations. This is where I buy the stock, buy the option, buy the money option, buy the expensive stuff, because those are the ones that are worth a lot. And as move in deeper in the money, it will give me bang for the bucks. So these are unique situations. You buy options, you buy the stock, you play the momentum. It could be intraday, it could be on 1 hour, 4 hours, or so. But this is where you're going to hit heavy. Most of the time, trading is just sitting back, like collecting nickel and dimes with high probability trade. Well, when you see something with fundamental push behind it, you need to jump in and make the bang for the buck. This is where you really going for the big one. And yes, sometimes you will get hurt, but this is the times. Same thing at hedge funds too. Hedge fund, when everything line up, when you see everything line up, you have to pour it in. So instead of 5% risk capital, I would do 10%. I would do 20%. I would just hit it heavy, and that might be the trade of the year. I'll buy the options. I will not play selling the option on these games. I'll buy the options, buy the outright stock. Option give me huge leverage. I will buy at the money options. Because as it moves from at the money to in the money option, that option worth a lot now. So I get that exponential increase and the leverage when I use the options. If I don't use the option, buy the stock. I don't even bother selling options when is one of these everything lined up. And this is a perfect example and how this type of play should work. And a breakout, a clean breakout, and you just find your breakout, keep marking the high of the day. When it break and make higher, and you just wait at least 10 minutes after the market open. You need to work out all the orders, and this is what it does in the morning. It push it down, push it back up, push it down. So it's whipsawing, and then the true trend starting to establish. This is the heart of trend following, regardless of the time frame. intraday, daily, weekly, monthly, does not matter. What matters is a trend is being supported by fundamental, and it's going to push it. And it's going to push it higher and higher. It's going to do its thing. And you do not listen to this very closely. Never take the other side. Never try to do a reversals, right, on a trending instrument, trending day, trending month, whatever. Never do it. That is how I lost my shit. I will tell you right now. Never do a reversal. Hoping for a reversal. No. You want to pull back, go over the pullback, go over the breakout. Stay with the trend. Always stay with the trend. And in the heart of my 25 years, 30 years of trading, this is what will make us a lot of money. When the instrument, when the stock, when the market, when the sector trend, and you will just ride it all the way up until you find your indicator that you're comfortable with taking profit, or you can just keep on riding. That's your choice, but stay with the trend. This is the essence of making money in the market, is fundamentals behind it and technicals lines up. You see buyers coming in. They sort out all that by selling order on these two retracement, and then you start slowly making up move, and then break, and then make a tiny little one, and then it go buy here and ride the whole thing until the momentum dies out, until your indicator tell you, okay, it's switching right here. You can do that. You might, as if you using the Hankin candles, indicator. That's from green to red. That's where you get up. You stay with the green. Yeah. So you can choose your indicator. You use them with both. The whole point is ride the trend and stick with it, and start or using trailing stop or just pure candlestick and whatever that works or you feel comfortable with. But the entry signal is very important. The mentality is very important, and do not never try to play a reversal on these guys. Yes, it could, but probably why when it takes off again, you're gonna get hurt. You cannot even get out because when it spikes like these, you think this is a reversal. It's coming in, look, a tail, right? This is a reversal. Big reversal, but long tail. No, you're so wrong. Look, it stopped spiking up like that again. Yeah. So yeah, do not take these reversal signal on the trending market. Do not go counter trend, especially with fundamentals behind it. I mean, a Morgan Stanley upgrade that, like, oh really? Is it real? Is it for real? Wow, I don't believe it, but people obviously bought into it. That's what matters. Technical confirmation is there. This is probably one of the most important section that I'm doing. Beside the setup, the stuff is an actual example that you can do intraday from a daily to an intraday, same strategy, breakout strategy. Right? Or pullback. I will be looking for pullback. Okay, pullback happened, but it's not ideal because it went through the resistance level and came back. Okay, so that mark becomes the new high of the day. Now it's a breakout. So you look for pullback, you look for breakouts. When breakouts happen, take the trade. Go aggressive on these. You have to be aggressive. That's what trading is about. Most of the time you lay back, right? It's a naval warfare. It's lay back. Right? And then you have moments of intensity, sheer intensity. I always say trading, you have to have unlimited patience, but when it happens, you got to be there. You be very aggressive. You are literally naval officers in that sense. You have all these big guns, you have these battleships, you have these big guns aiming, ready to fire, and you're waiting for these chances. When everything lined up right into your target, well, launch a projectile, fire it away. Yeah, sometimes it may go bust, but that's how you make real money. That's what I'm trying to say, is that other times you're making a daily living, a comfortable living, making your ends meet, paying your rent, paying your mortgage, paying and stuff like that, supporting your family. But when this happen, when things like these, a trend happen, go in hard. I go 20%, 1/5 of my trading capital. And then right there, I will make 1/5 of my trading capital. And if I use option and leverage, most of the time I actually even level more, and I make a lot. That's how you make a lot in actuality. Is jump on these trends when there's fundamentals behind it and technical confirmation. Just go in. Yes, you might lose. So that's why, hey, 1/5 of risk capital is maximum. So worst come to worst, you can take 5 of these trades for your whole account. Not one day, 5 of these trades. These trade happens once in a blue moon, rare. But when it happens and you see it, you have to see it. But before you see it, you got to visualize it. You got to see it before. Your mind already recognized it. Then, when it takes place, you will be over. You go put all your big guns, your big Yamato cannon, your North Carolina, the biggest battleship cannon, whatever. Launch your big cannon, not the little one, not the mid-sized one. Launch, and you have multiple turrets, so you fire one, right? Wait for the other one. You might have took this one. You just trigger happy, right? And then took another one. You load up, and there's actually not even the chance for you to get in. Chances are you'll be lucky. You get a second chance to come in. Like this one, only one chance to get in. Right. So within that 20% max of your risk capital, you have to divide into 3 shots or 2 shots. So each shot actually is 8% to 10% of your maximum risk capital. And in between, you might even load. But the whole point is you have to get your cannon ready and fire. You have to see the target before. You have to recognize it. And this is how you recognize it. Burn it into your mind. Burn it into your eyes. Burn it into your brain. Is remember that. Fundamental news. Gaps up. And then make new high, fell first time, second time, maybe sometimes even third time, breakout, next one make new high, get in. Right all the way. Don't get out early, right? Because this is the real trend, first trend, and it's going to do a pullback. Now the second wave. Right, now that's actually the wave for this guy on the next day, which is today on the 12th. Right. So this is a great example. This is a perfect example. This could be a daily bar, right? But this happened on a 5-minute base, and regardless of the time frame, regardless of the candlestick time frame, it's applicable across all different time frame. I cannot emphasize enough. This is the one that will make riches. Of course, or you're down 10 to 20% of your account, but you have to take these risks once you establish yourself, once you want to make it. To make the big bucks, you have to take risks. Right? And after 2.5, 3 decades of trading, I say, yes, you have to be risk aware most of the time until everything lined up. Then you jump in. And you don't go all in 1/5. I go all in. You can go 110, whatever, but go heavy. Go 110 if you're not comfortable. You got 10 shot of these. These type of trade, the breakout, we trace my breakout with fundamental behind it. This is a hell of trend following. Of course, it could be a false breakout, like the first move is the first breakout, like that. If you took a trade on this, if it happened this a false breakout, but it did give me a green bar, make new high on the breakout bar, and then next bar give me a new high, I got it, and then it retraced back. Well, guess what? Where is my stop loss? On this first example, this is my stop loss. And I set it below, not right there, because it's going to try to run those stops. So I set it way below confirmation that I messed up. Well, I didn't mess up, but the market tell me otherwise. And I get out way below, not right here, not a couple pennies below, but give me some room. And then it might even run those stop and then bounce back and run that stop, chop around until it do a trend. And you're gonna keep You might have to keep pushing, making new high of the day. But as soon as you make a new high of the day, break through that new high of the day, and then the next bar make higher high, right? Right here or this bar, get in. You can get in here, you can get in when we new high. Depends on you watching it. You miss this bar, fine. Next bar. Now this bar, you have to get in. And you have to take that risk. You have to trade when it happens. When everything lines up. The key is everything lines up. And through experience, only through experience, you will find that feeling that everything lines up. In the beginning, a lot of time you're just trigger happy. You make this small little mistake that's trade more in the middle. In the beginning. After you do 20, 30 of these trade, understand the mechanic, then you start going heavy. Yeah, do 1 share, 10 share, do little in the beginning. I develop these over the years. After 2-3 years of this, you know when it lines up, you know when to go heavy, you know this is the trade of the year. You know this is like, okay, you take this trade, you go heavy. You can be done for the quarter, for the year. In that sense. And this is how you make a lot of money. The sky is the limit. Selling options is a safe play. Very safe play. Selling those 12 delta, 20 and below delta is a very safe play. But it won't make you a lot of money, ultra wealthy in that sense. Those are just to help pay for your living expense, your daily costs, your mortgage, whatever. Support your family or yourself. Doing that. But this is where you become a real market speculator. This is where you make or break. Yeah. So be aware of that. You will take some losses in between. But when you learn to see enough of these, you can actually feel, you can smell, you're swimming in the market. You know this is a trade. You see it, you just go. And it takes experience to do that. And this is why I emphasize, yes, take your 10, 15 minutes a day, every day review these charts and stuff like that. And when you see it, you know it's there and you're going to do it. Have I seen this? I was sitting there. I would take the trade. I didn't take this trade because I wasn't watching Tesla. I wasn't really watching throughout the day. Yeah. But afterward, I realized, hey, that is the trade. This is the perfect example. This is the trade for the quarter. This is a big one. Next one, I don't know, it might not, but this, and it happens to work out. If I have took the trade, hey, alright. So this is a very special episode session that I need to get out there, so you guys can learn and continue to build your experience on breakouts on trend following. The market only to do things. Market goes up, market goes down, market goes sideways. Most of the time, market is going chop around sideways. But when it trend up or down, when it trend, 30% of the time, it trend, they say, hey. That 30% of the time when it's trend is where you make money, where you make investing is about following a trend following. Everything we do is building money over time is trend following. You want to make money? Learn trend following. None of that other fancy whatever stuff, okay? Trend following is where the big monies are. Look at total trading. Total traders. They're really good at that stuff. Yes, they have long-term trend following. Everything is pro and con, but these are the guys, these are the type of play that make big money. I don't get your hedge fund, right? Reversion to the mean, all that stuff. Yeah, okay. You can make something a little bit more safer, but trend following is where you make a lot of money. But you do not gamble. This is why it's so important to slowly build experience, right? And learn when to capture these trends. Well, this is important sessions. I hope all of you will learn, and every time I see these more, especially any fundamentals behind it. Could be post earning. This is the time to talk about these things before it happens. Right? Now, this time is perfect background now that we have that established how to make big money in trading. Try and follow it. Just 2 words. Find your entry signal, find your repeatable process, find your scalable process, and you're well on your way. So this is where we put the lessons. Review it, draw it into your head, visualize it, see it, and practice it with your mind. Keep practicing until you feel comfortable. Start slow, start small, slowly scale it up. It will take you years. But you have to start somewhere. And it's a skill set that you learn. Once you learn over time, you can always come back to it. And you say, oh, I see this. This is what I know. I've seen this before. This is a trade. This is the one. That is the one for you then. Okay, thanks for watching. And hopefully I got more of these as the market develops, as the market plays out, and I will start pumping of these specials. Thank you very much. And until next one.